How does the great state of Delaware tax you if you're making $60,000 a year in retirement? Now, Delaware is one of my top 5 or 6 retiree-friendly states. Absolutely. But let's just dive into the numbers here because we're going to look at everything from Delaware on $60,000 a year in income. Then we'll dive deeper to look at property tax, sales tax, gas tax, you name it. So stay with me here at the Heritage Wealth Planning YouTube channel because we go over every state and you want to know what's going on here today in Delaware. So if you like what you see here, subscribe down below. Don't forget to hit the bell to be notified for future content. And let's just dive right into it. So we go to the Heritage Wealth Planning website, heritagewealthplanning.com. We click up tax tools up here on the top right. Go down where it says interactive tax tools, and that will take us to the screen where you'll see a couple of different tax tools you can use, and I highly encourage you to do so. The interactive tax tool is from the taxfoundation.org, and lots of good scenarios you can run on your own specific situation when it comes to the Tax Cut and Jobs Act, aka the Trump tax bill. And then the smartasset.com for state tax tools, and here you'll see the map of the U.S., and you'll see Delaware will be in. They have Delaware in the top, tax friendly, not very tax friendly. Yeah, I don't know about that. Let's dive right into it here. So let's go to Delaware. And as what we do here, we say we're married filing jointly. All right. And we're going to have, we're born in 1952. So we have 2 standard deductions, each of $13,300 because we're over the age of 65. We're going to say we have $40,000 of IRA income and $20,000 of Social Security. And where does that leave us? We pay $29,000 to the state of Delaware. I'm going to write these numbers down because I'm going to keep it for my book I'm going to soon publish called State by State Guide to Taxes for Retirees. So in this case, we pay all $29 to the great state of Delaware, but we do pay $2,871 to the feds. So that's okay. So again, the feds is always the bugaboo, not the state so much when it comes to income tax. Now, property tax is a different story. So let's flip these around. We're going to say now we got $40,000 of Social Security and only $20,000 of IRA income. And what you'll see is we pay nothing to nobody. Nothing to nobody. No federal tax, no Delaware tax. And the reason for that is because the Social Security income is such a big proportion of our retirement income. We have no taxable income. Let me show you what I'm talking about. So remember, before we had around $3,000 of taxes due on $60,000 of income. Now we have nothing due on $60,000 of income. It's solely because of where their income comes from. So first thing we got to do is we got to figure out our provisional income, which will tell us how much of our Social Security is subject to taxation. So to figure out provisional income, we take half of our Social Security benefit, in this case it's $20,000, and we take all of our other income, in this case is $20,000. So our provisional income in this case is $40,000. All right, so half our Social Security. Let me make myself bigger. Half our Social Security plus all of the other income, which also exempt interest, my friends. Do not forget, tax exempt interest is part of the equation. That's our provisional income. Now, when it comes to how much of your Social Security benefit is subject to taxation, there's 3 different numbers we got to look at. 0 to $32,000 of provisional income is not subject to any taxation. 32 to $44,000 is subject. 50% of that amount is subject to taxation. And then anything above 44, 85% of that amount is subject to taxation. So here we have, $8,000. Excuse me. Let me erase that with my. Look at this pen's pretty sweet. It's got a nice little eraser on the back. Pretty nice. All right. So here we got. I'll show you. So here we have 40,000 is our provisional income, of which the first 32,000 is none of that subject to taxation. The next amount between 32 and 44, well, 50% of that is subject to taxation. So we have 40,000 minus 32 equals $8,000. All right. And that's taxed at 50% of that is subject to taxation. So 50% of this 8,000 is going to be included in our taxable income. Now, any amount above 44,000, 85% of that will be included in your taxable income. Here you can see we don't have any above that. So the only thing that's included in our taxable income from Social Security is $4,000. That's it. So now what we do is we take our $4,000 of taxable Social Security income, plus all of our other income. In this case, we do not use tax exempt. We only use our IRA distributions, but we don't have any tax exempt in this scenario anyway. But just FYI, in this case, to find out your AGI, you do not use tax exempt. And we get an AGI of $24,000. So again, we take $4,000 as our taxable Social Security of $40,000. Only 10% of that is subject to taxation. We add the $20,000 IRA distribution, and our AGI is $24,000. But Josh, you should be in the 10% tax rate, or the 22 or the 12% tax rate. No, sirree, Bob, because you're missing the $26,000 of standard deduction you have. And so what that means is you have 24,000 as adjusted gross income. You're in the 26. You're in the you're over 65 years old, so you have 26,000 of standard deductions, which means your taxable income is actually negative 2,600, which means you don't owe anybody anything. Even though you have $60,000 of gross income that you can spend, you're going to spend all that because you owe nothing in taxes. Whereas if you flip the two around, where 40,000 is from IRAs and 20,000 is from Social Security, you now owe $3,000 in taxes. So you're $3,000 towards the wealthier simply because you did proper tax planning with Social Security. Now, in this scenario, what I would do, I'd highly suggest that if that were you and you have negative taxable income, I'd start moving money out of your traditional IRA into the Roth ASAP. Take advantage of your negative tax bracket or your low income to your negative or to your 0% tax bracket and start reducing your to-be tax accounts in your IRA. Do that ASAP. All right, so let's keep diving down here. So let's look at the cheapest places in Delaware. Another reason I love the smartasset.com tool, it will tell us the best places to live in the state of Delaware as well. And we can derive a lot of great information here from this in terms of sales tax. You got your income tax, property tax, fuel tax, is Social Security tax, the whole kit and caboodle. There gives the top 10 places in Delaware once it kicks on. For some reason, it always takes a little bit of a long time. Here we go. Not sure why it takes so long to generate this, but they're literally going in smartasset.com, the algorithms, the artificial intelligence, and they're running all the numbers on each place in the state. All right, so as you can see, Georgetown, Delaware, number one, which is smack dab here in the southeast middle, is the lowest place to live, tax place to live in the state, has a retirement tax friendliness of 78.96, which is very, very favorable. To give an example, Alexandria, Alaska's 99 point something typically on their best place. Alabama's 58, just did Connecticut. Its best place was 23. So Delaware is more favorable than like Alabama, a little bit less favorable than Alaska, but much, much, much more favorable than a lot of its states up the Northeast. So Georgetown, Delaware, the income. Here's what we're doing. This scenario that they're using is a guy or a lady who's retired. Well, not retired, but he's over the age of 65. He's or she has 15,000 Social Security, 10,000 from a pension. I think it's 15,000 from IRA distributions and 10,000 from earned income. That guy made $50,000 total across various sources of income streams. And in this case, he's getting his taxes due are $58.46. His property tax rate is 0.44% because he lives in Georgetown, Delaware. There is no sales tax in Delaware, and fuel tax is not high, but Connecticut is 3 times that, but it's pretty low. And so what they're doing here is they're looking at, for the property tax in particular, they're looking at all the cities in Delaware, taking the median home value and dividing that by the median property tax paid. All right, so that's a pretty doggone low, 0.44%. The fact you got no sales tax, the fact you got low property taxes, and the fact that you can have no income taxes, we just talked about, with $40,000 from Social Security and $20,000 from IRA. You're basically living large, man. You're living tax-free other than a small fuel tax. So I'm telling you, Delaware is among my favorite states to retire in for sure. I'm just trying to see, nothing on the water. This Rib Hopeless 9 there. 9 is what? Claymont, never heard of it. I think this is Maryland down here, and I think that's New Jersey up there, if I'm not mistaken. But anyway, you can see it's scattered throughout the state. Number 2 is Milford. Newark. Yeah, there's Newark. You always remember going through that. Anytime you're going 95, right after, I think after you get outside of Maryland, before you hit the PA/New Jersey area, you always see the Newark, Delaware exit. That's for sure. So anyway, That's Delaware for you, my friends. Delaware is a wonderful place to retire if you're tax conscious, that's for sure. So hope you like what you see here. As always, if you do like it, don't forget to subscribe. You can go to the blog. All this stuff is available for you for free, heritagewealthplanning.com. If you do subscribe, hit the bell for notification. Thumbs up and comments always welcome, and we'll see you next time. Thanks, guys.